Ladies and gentlemen, welcome back to the channel. Tesla's earnings, the numbers are out, and the stock is largely unchanged on these numbers. Now, I'm actually impressed with the numbers that we've seen. There was some massive beats in some areas, some misses in other areas. Now, what's really going to determine what happens for Tesla stock is the conference call, and we will cover that in the video coming out at 8 p.m. tonight, and that's really gonna be the catalyst for Tesla. But here in this video, we're gonna go over the initial numbers, what I really like, what looks really good, and what looks not as good. Now, I'll share my thoughts around the conference call and my expectation for that as well. And we'll talk about what happened in the markets today. It was a bloody day. It was a rough day across the board. And I think that deserves a little bit of an explanation as well. So we're going to get started with these Tesla numbers, guys. Hit the like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of today's episode if you want to come join the trading community, where we are going out and finding the stocks that Wall Street is overlooking. Okay. We are doing thousands of dollars of buying the last couple of days. Today alone, I put about $10,000 into 3 different stocks, including an options trade on Tesla for Tesla's earnings, which could get exciting. But if you want to come join us, check that link out down below in the description of this video. Just come try it out. If it's not for you, then it's not for you. But here we have it, okay? Tesla's Q3 revenue smashed expectations, coming in at $28.10 billion. The estimate was $26.36 billion. Tesla's Q3 adjusted EPS came in at 50 cents versus estimates of 54 cents. So that was a slight miss. Tesla's Q3 free cash flow, $3.99 billion. Estimate $1.25 billion. A complete blowout. Tesla's Q3 gross margin came in at 18%. Estimates were 17.2%. Damn near a blowout on that metric as well. Q3 operating income at $1.62 billion versus estimates of $1.65 billion. Little bit of a miss there, but largely in line. Tesla's Q3 EPS came in at 39 cents versus 62 cents year over year. So year over year comparisons, not looking as great. But when you add all of this together, the blowout in free cash flow, the blowout in operating earnings, essentially, the margin, that is way offsetting the lower than expected EPS number, okay? That's huge. I wasn't even expecting a blowout like that on revenue, free cash flow, margins, and again, operating income that came pretty much in line with expectations. So this is one of the better earnings you've had from Tesla in a long time, believe that or not. Now, here they say in their shareholder deck that they had record free cash flow, again, of nearly $4 billion, operating cash flow of $6.2 billion. That's incredible. When I first seen these numbers, I was like, okay, there's no way Tesla's stock is going to be down following these numbers. Like, people had higher expectations this quarter than per typical because of the better than expected deliveries. But these numbers are crazy. There was a $4.9 billion increase in their cash and investments, now sitting at $41.6 billion. They are sitting on a gosh damn war chest at this moment. Now, under operations, they say they launched the ride-hailing service in the Bay Area using robotaxi technology, record energy storage deployments, and record vehicle deliveries. Now, in their summary here, they say, in Q3, the Tesla team achieved record vehicle deliveries globally, showing strength and growth across all regions, while also achieving record energy storage deployments across the residential, industrial, and utility sectors. This strong performance resulted in both record revenue and free cash flow generation in the quarter. We continue to launch new products that excite our customers across automotive and energy. We launched the Model Y L and Model Y Performance and further expanded our vehicle offerings with the Model 3 and Model Y Standard. our most affordable vehicles. We also unveiled the Megapack 3 and Mega Block, which will further amplify large battery installations by reducing cost and time to deploy. We believe our scale and cost structure will enable us to navigate the shifting market dynamics across the globe more effectively than our peers, with advances in AI making our products the most compelling in the market. Our focus remains on scaling our core hardware business by maximizing our deliveries and deployments, as these products will deliver increasing value to our customers over time via services powered by AI. Every Tesla vehicle delivered today is designed for autonomy, while every Tesla energy storage product is capable of being enhanced and optimized by our virtual power plant or auto bidder functionality. We continue to deliver a fleet of products that brings AI into the real world as we pursue a future of sustainable abundance as outlined in our Master Plan Part 4. While we face near-term uncertainty from shifting trade, tariff, and fiscal policy, we are focused on long-term growth and value creation. We are prudently making the necessary investments in our business, including future business lines that we believe will drive incredible value for Tesla and the world across transport, energy, and robotics. If you're a Tesla investor, so far, this sounds like a win. Now, Tesla stock doesn't trade on the numbers. Now, Tesla could have had a blowout across the board. It's not like a typical stock where it's like the earnings are the most important. Okay, that's not the case for Tesla. Okay, so you can run through the shareholder deck if you would like to, but that's pretty much all at this point that is beneficial to Tesla. You could see down here they kind of break down more. In the outlook, it says, it is difficult to measure the impacts of shifting global trade and fiscal policies on the automotive and energy supply chains, our cost structure, and demand for durable goods and related services. While we are making prudent investments that will set up our vehicle, energy, and other future businesses for growth, the actual results will depend on a variety of factors, including the broader macroeconomic environment, the rate of acceleration of our autonomy efforts, and production ramp at our factories. As far as cash, Tesla says we have sufficient liquidity to fund our product roadmap, long-term capacity expansion plans, and other expenses. Furthermore, we will manage the business such that we maintain a strong balance sheet during periods of uncertainty. As far as profit, they say, while we continue to execute on innovations to reduce the cost of manufacturing and operations over time, we expect our hardware-related profits to be accompanied by an acceleration of AI software and fleet-based profits. As far as products, they say, we continue to evolve and augment our product lineup with a focus on cost, scale, and future monetization opportunities via services powered by our AI software. We remain focused on growing our sales volumes through a differentiated and efficiently managed product portfolio, which includes leveraging and optimizing our existing production capability before building new factories and new production lines. Cybercab, Tesla Semi, and Megapack 3 are on schedule for volume production starting in 2026. That's great. First generation product lines for Optimus are being installed in anticipation of volume production. Okay, I don't know if the algos are picking up on that, but we're going to hear a lot about Optimus, a lot about AI, and 2026 in this conference call. And that is what is going to really drive Tesla. Now, as far as their core technology, they say here, artificial intelligence, software, and hardware. This is going to be the last thing we cover from the shareholder deck. They say, we began deploying V14 of FSD supervised in October, bringing a large portion of the Robotaxi FSD model to consumers, plus improved handling of several complex scenarios, such as avoiding road debris, yielding for emergency vehicles, and adding arrival options to indicate where FSD should park. We expanded both our service area and fleet count for a Robotaxi service in Austin and launched our Bay Area ride-hailing service. These efforts help refine our Robotaxi service by providing valuable real-world data that will allow us to quickly scale to other cities in the future with our universal model. Come on, dude. This is kind of a preview of what you're going to hear on the conference call. Let me read that again. It says, these efforts help refine our Robotaxi service by providing valuable real-world data that will, key right here, will allow us to quickly scale to other cities in the future. quickly scale to other cities in the future with our universal model. We talk about this on the channel all the time. But one of the reasons why, Wall Street's going to be so surprised in 2026 with robotaxi and the expansion is Tesla is, mapping the way or paving the way, if you will, with their validation services and getting the regulatory processes underway in many cities. They're going to be able to quickly launch once they get the regulatory approval to do so. Now, it says, we announced a deal to manufacture advanced semiconductors for AI inference and training in the U.S. with Samsung and further expanding our AI training compute capacity, bringing Cortex to a total of 81,000 H100 equivalents. So this is what we have so far. So far, if this was a standalone and we were not getting a conference call, I would expect that Tesla would do well tomorrow. Okay. Now you're getting a little bit of selling pressure. Stock's down about 1%. The stock has rallied a lot in the last 3 months. I don't think this reaction matters at all. Now on the conference call, I think we're going to hear a lot about 2026, a lot about robotaxi, about Optimus and their plans for the future. As I've said before, Elon Musk is very much incentivized heading into the shareholder meeting on November 6th to get the stock as high as possible. The higher Tesla stock is, the better the odds are for approval of his compensation package. Okay. So I think you're going to hear basically Optimus, like we've seen in the shareholder deck. You're going to hear that Optimus production 2026. You're going to hear that, there's going to be thousands of cybercabs out on the road next year doing autonomous robotaxi rides. And hopefully we get a specificity on how many cities Tesla is expecting to launch in. Okay. Those are going to be some of the biggest things that are going to move Tesla. Cheaper vehicles potentially coming, could that move the needle for Tesla? Of course. I don't know if we're going to hear about that. But those are the big things for the conference call. Now we will cover the highlights of the conference call on this channel at 8 p.m. So don't worry about that at all. But so far, I gotta say, this was one of the best earnings for Tesla we have had in a very long time from a numbers perspective. Like normally Tesla meets or misses on everything. Tesla basically gave you a blowout besides like EPS and operating free cash flow, right? Everything else, damn near a blowout, okay? Especially that margin number, which Wall Street cares about a lot. This is a win, no matter which way you really want to try to paint it. But again, it's the conference call that is going to drive the next move for Tesla. Now, I think we should also talk about what happened in the broader markets today, some of the news, and why stocks ultimately sold off. So let's get into that. The stock market today is crashing. There's really no other way to put it. A lot of stocks that have been kind of momentum names are down, a lot of them over 10% today. And I think this is something we really need to talk about because most people are confused about what's happening. And I think we've figured it out. Okay. We're going to talk about it in this video. We're going to go over your broader market news and everything you need to know, where the markets are from a sentiment perspective. Am I buying this market? All of that. But I want to start with what I said to the trading community today. So I said at 10:59 a.m. this morning, when things really started to look nasty, I said, let me quickly share my thoughts on what I think is happening in the markets recently / today. Today, there's a slight rotation into staples. What does this suggest? Growth concerns. Like staples, Johnson & Johnson was up today. A lot of other healthcare names, staple companies, right? Companies that aren't going anywhere anytime soon. This suggests growth concerns. Gold and silver selling off recently could signal growth concerns also. Momentum stocks suddenly selling off signals growth scare. Oil is below $60 a barrel, also suggesting growth concerns. 10-year treasuries below 4% equals growth concerns or low inflation concerns. Probably both. I said here, I think most of the growth scare at this point is coming from the government shutdown and fears this could lead into some kind of recession. Some people, including Treasury Secretary Besant, have said that the government shutdown could start costing the U.S. economy $15 billion per day. So logically, with a slowing labor market and this headwind, the longer the government shutdown lasts, the perceived higher the recession probability becomes. We are now on day 22 of the government shutdown, and basically all morning, that's all that has been talked about on CNBC. Like, for the most part, that's what they talked about like all day was the government shutdown. And, I think that's really what is starting to impact markets. Hassett said 2 days ago that he expects the government could reopen this week, but we'll see. We also have the China situation, but Trump has repeatedly said, quote, don't worry about China. I think Wall Street generally believes that. Now, are they a little, intimidated by that? Are they a little concerned about that? Probably. But I think generally Wall Street believes Trump when he says, don't worry about China. Now, what are the facts recently? Earnings have been great in aggregate. AI investment still seems to be alive and well despite the sell-off. We don't know what is happening with the economy besides earnings from banks and credit card companies that have told us the consumer is doing okay. There hasn't been any red flags from credit card companies. You would think that would be the first place you would actually see a lot of the problems arising if things were getting dramatically worse from here, okay? I know a lot of people that would max out their credit cards without a second thought if they had got laid off and they needed to pay their water bill or their, light bill or whatever it is. They would max out that credit card and not think twice about it, okay? Especially if they have kids. So you're just not seeing a lot of that, okay? Capital One said things are fine. American Express said things are fine. So presumably the economy is still hanging in there, okay? I say here, while I don't know how bad this could get, I do know something definitively. If you believe a recession is coming next year, you should not be buying this market. If you believe the economy will avoid a recession, you should be buying. The real question is, are we buying a falling knife? The answer is recession or no recession. AI is alive and well. And as long as we don't have a recession, if we do have a recession, that's the excuse companies would use to slow AI investments. It's kind of one of those things where, maybe companies do want to slow down AI investments, but they're not going to slow down if nobody else is slowing down, because this is an existential crisis for a lot of companies. Google, as an example, their business model is under attack. They cannot slow down AI investments. But if there were to be some kind of recession and they all slowed down, then Google could potentially justify that. Although I think that wouldn't make a lot of sense for most companies, which again, it's like, even if you did have kind of recession fears or a recessionary environment, slowing down on AI could cost your company big time, whether other people are or not, right? That could be Google's chance to get ahead, okay? Now, I say here, but from where I see it, companies are fighting for survival with AI domestically. Again, Google cannot stop AI investments even if they wanted to because their business model is under attack, and this goes for many other companies in varying sizes. We are also in an AI Cold War with China, so there's that. My thoughts. I understand why stocks have been panicking recently. We are in an economic blackout. Well, last we knew, the labor market was weakening, but I believe the economy is largely unchanged in recent weeks. I don't see a dramatic weakening. The restaurant I'm an operational 50% owner at is still hiring. Just hired 2 people today, and business is unchanged from prior months. I still believe the consumer has room to strengthen next year. Inflation will continue to come down in the next 12 months, and AI investments will continue. I see markets getting to a pretty fearful level. The comment section of YouTube has grown increasingly more and more bearish the last couple of days. To me, under the belief we will not have a recession is a buying indicator. That's why I did some buying today and will continue to keep buying until we have more definitive recession indicators. But that's the question. Recession or no recession? That's the real question right now. Now, if you guys want to come join the trading community, see the stocks that I'm actively buying, what I'm hedging, what I'm doing in my portfolio. Check it out, link down below in the description of this video. We mainly target AI, energy, quantum. We have a quantum stock, biopharmas, gene editing, robotics companies. These are main themes for the next 10 years. We want to get in on smaller cap companies where Wall Street doesn't quite understand them. Wall Street understands NVIDIA to a T, but they don't understand Resolve, okay? Clearly, the valuation is reflective of that, okay? There's opportunities in the smaller companies where Wall Street has just not gotten around to understanding them yet, okay? So we're targeting a lot of those opportunities and exceeding and doing quite well. But again, let me know down below in the comment section, are you team recession or no recession? If you are team recession, you should not be buying a single thing in this market. Now, I'm not a financial advisor. I'm not a financial planner. Just as a general rule of thumb, like if we were to have a recession, stocks are going to fall a lot more from here. If we don't have a recession, logically speaking, you should see a recovery. Now, you do want to be a little selective in what you're buying, right? For an example, in quantum, there's one company I own, CCCX. They're merging into inflection, okay? The whole quantum space has been hot recently. I don't want to buy Rigetti or D-Wave or IONQ, but the significantly undervalued quantum stock relative to the other ones, that could be an opportunity if you believe in quantum. So you want to be a little bit selective in where you are deploying your capital. One that I've been buying a lot recently is UiPath, right? Path. It's a very well-known AI company at this point that just got deals with Snowflake and OpenAI and what's the other one? I believe Google, someone else. 3 major partnerships. Like, that stock goes on sale, I'm going to buy it because I don't think there's a recession coming. But if a recession comes, that's the risk. Now, with that said, let's get into more of your specific news today that helped cause some of this downside. Before we get to that, just take a look at the broader markets today. The Dow is down 0.25%. The Dow is still red, but there is a rotation again into some of your staple companies. Walmart, Johnson & Johnson, again, just to name a few, were some of the ones that did better today. S&P 500 was down 0.3%, NASDAQ down 0.75%. Russell 2000 really taking it on the chin here. Again, these are growth concerns. These are recession concerns. Down about 1.5%. The VIX is up 4%. So it's not like we're seeing a ton of fear out there, at least not suggestive in the VIX, but there is definitely some nervousness. Okay. Now, 10-year treasury yields are largely flat today, but they're below 4%, trading at 3.97%. Oil below $60 a barrel. It is up 2.5% today. I think mainly because the U.S. is going to be buying and restocking the strategic petroleum reserve. So that's important. Gold is down another 1.4%. And I think some people are a little nervous over that because you've seen quite a liquidation in the last 2 days for gold, where gold was just recently at what, $4,400 an ounce. Now it's down to 4,000. Looks like it might break below 4,000. Yes, gold has had quite a rally. Not super surprising to see a bit of a reset. But some of these issues, again, government shutdown, blackout from an economics perspective. We're not getting economic data right now. People don't really know where the economy is at. That is all coming together kind of as a perfect storm in October, where you do tend to have this seasonal volatility. October, while it is one of the best months of the year, October does tend to have the biggest swings. So October has the most 1% up and down days. Okay, a lot of people don't know that, but October is a very volatile month. It does tend to end good. Okay, it's the 4th best month historically out of the year, so it's in the higher, quartile of months, but it is a very volatile month, typically. Now, November is the best month of the year, tends to be pretty uniformly bullish. And December is the 2nd best month of the year. So November, December, you're really heading into seasonal strength here. Now, Meta, lays off 600 employees within their AI unit. Now, again, this is nothing. This is a nothing burger, okay? It's kind of like the news we got semi-recently, maybe a month or two ago, about Microsoft canceling some of their data center contracts, okay? People were like, oh my gosh, what does this mean for AI? Nothing. It literally meant nothing. They canceled some contracts, wanted to go somewhere else with those contracts. It means nothing. Meta's saying they're laying off these 600 employees basically because they want to be leaner, okay? They probably don't need as many employees as AI gets better and better. They can start letting go the underperforming employees, okay? I think this is pretty normal, and it doesn't signify anything. Now, also what you should be aware of is Friday, we're going to be getting the CPI report. Now, the sell-off in gold, the sell-off in risk assets actually suggests that we could have a really good CPI report. And I know some people are like, huh? How does that make any sense? Imagine if the CPI report was like negative 0.3% month over month, okay? You would think that would be good, okay? You would think that'd be great for stocks. But the reality is, if CPI were to, let's say, plummet, that is a pretty strong indicator that the economy is also plummeting. See, inflation and economic activity tend to go hand in hand, okay? If, for an example, you have high inflation, you tend to have strong economic growth. People are willing to pay more for products and services, so on and so forth. Inflation cannot thrive in a weak economy. So if inflation were to plummet, which, you know, the plummet in gold and silver kind of suggests that, then that's a sign the economy is plummeting. The problem is we don't have economic data, okay? We just don't know. And there's, like a data blackout right now. So I think that's making some people a little nervous. Now, as I said in, I believe it was yesterday's video, it did look like the CPI report maybe got leaked to some of your big money. And that would make sense why, again, momentum stocks are selling off if we get a really good but alarming CPI report. Now, this, if that's what we get, if we get a low CPI report, that's going to prompt the Fed to be cutting rates more aggressively, of course, and maybe that offsets some of it. Maybe that, is a positive to offset what could be a negative. But until you get to Friday, you just don't really know. Now, here's the other part of it. Stocks are selling off aggressively recently, right? So maybe you're pricing in that really good, but could mean really bad CPI report for the economy. Maybe we get the CPI report on Friday and you actually see stocks do very well on it. That is also a possibility. It's kind of like if a stock sells off into earnings and it's not as bad as feared, the stock can go up even on bad earnings. Even if earnings are bad. We've seen that with Enphase a lot. The stock would just sell off aggressively, really low expectations for earnings. The stock would have bad earnings and it would still go up. Now we see it all the time with a stock like Tesla. Tesla might rally into earnings, give you basically everything you want to hear, but it's not impressive enough and the stock sells off. So that could happen on Friday. Friday could be the reversal day. Now, with that said, we do have earnings from Tesla in after hours today. IBM, Kinder Morgan, QuantumScape, SAP, Alcoa, and Lam Research. Tomorrow, American Airlines, Honeywell, Dow, Hasbro, Nokia, Southwest, AutoNation, and T-Mobile. Thursday, in after hours, you have Intel, Newmont, Alaska Airlines, Deckers, Boyd, Ford, and then Friday, you have P&G and some others. So basically, earnings, although they've been really good, you have the highest earnings expectations that you've had for a single quarter going back to 2021. Hence, partially why stocks did well over the last couple of months is because earnings estimates keep going higher. Some on Wall Street might be a little bit nervous as we get to big tech earnings, specifically, again, around AI investments, around, profitability metrics. when you're already expecting really good results. Okay, so that could be part of the fear. If we take a look at the percent of stocks trading above their 50-day moving average, you're at 48.5%. So basically 52% of stocks are trading below their 50-day moving average. So there is, again, some pretty severe weakness out there internally in markets. The CNN Fear and Greed Index is sitting at 27. You're almost back into extreme fear. Market momentum is fear. Stock price strength is fear. Stock price breadth, extreme fear. Put and call options, extreme fear. Market volatility is neutral. Safe haven demand, extreme fear. And junk bond demand currently in extreme fear as well. And again, the AI Investor Sentiment Survey showed bullish investors at 33.7%, bearish investors at 20.3%, and neutral investors at 46.1%. We will be getting a new AI investor sentiment survey tomorrow. I think the bears are probably going to go up again. The bears could cross above 50%. And again, with these kind of sentiment indicators, as long as we don't have a recession, historically, you will do very well if you are buying the dip. If we have a recession, none of this shit matters because stocks are going to fall a lot more. Now, I am under, again, the prevailing narrative that inflation is going to continue to come down. The Fed is cutting rates. That's going to be stimulative for the housing market. We've already seen some pretty good housing numbers starting to come out. But you have to remember, 50% of households are a little bit more than that, are homeowners. And they have a lot of equity. Okay, there's 4 million homes sold a month on average in this country. People are going to be able to take, 100,000, 200, 300,000, whatever the number is, to their bank accounts after they sell their home. What are they going to do with that? They're going to invest that money or they're going to spend that money. That's just how America operates. So there's going to be a boost to consumers from the housing market alone. Not to mention the big beautiful bill, no tax on tips, no tax on overtime, being able to write off things like auto loan interest, so on and so forth. So I think those things help the consumer. I think inflation continues to come down. You have rate cuts. You have, should be a pro-growth administration, cutting red tape. We'll have to see. That could take a little bit of time to play out, but maybe at some point next year we start to see the benefits of that. And I believe AI is alive and well. That's the bottom line. Companies internally are fiercely competing with each other. They cannot afford to slow down on AI, right? OpenAI doesn't want to slow down because then they're potentially going to give the lead to Google, right? Google doesn't want to slow down because then they're just going to let OpenAI win. Okay? Those are easy examples, but the competition is happening with all these companies. And that's on a micro level. Then on a macro level, if you're looking at the globe, you're competing, all of America is competing with China. Okay? That's not going away anytime soon. So, when I put these things together, kind of like Mike Wilson said last night, following the Doge layoffs, he actually thinks we're heading into a new economic cycle. That the old economic cycle, the rolling recessions, the labor market weakness is actually broadly over, and we're heading into a new economic cycle. Let me know your thoughts on all of this down below in the comment section. Hit the like button as well as subscribe to the channel. If you guys want to come join the trading community, come get involved in the best trading group in the entire world. That link is down below. Check it out. Come try it out. We'll welcome you with open arms. Okay. That is it. Have a great rest of your day, and I will see you at 8 p.m. to cover the conference call. Till then, take care.